Yo, what's up with you guys? It's Ict right here. You're welcome again to another trading week, and as always, we'll be doing pre-market analysis today. We'll be going to the chart. Let's see what we'll be expecting for the week. Okay, today is Tuesday. Sorry, I couldn't post this video yesterday, which is Monday. All right, but we still have time to engage in the weekly expansion. Okay. As you all know, I'm an ICT trader. I share my forex educational content on this YouTube channel. So maybe this is your first time of joining me. Do well to smash the subscribe button, alright? Subscribe, then turn on the notification bell so you're notified every time I post on this YouTube channel, okay? Definitely you're going to be learning a lot. So right now, one of the challenges that the ICT traders or mostly traders face is being able to determine the daily directional bias, alright? So if you have been following me consistently, you know that you'll be able to determine the daily direction bias at ease, alright? Just following my weekly pre-market analysis. All right, keeping it very simple. You don't need to complicate it. A lot of you try complicating a lot of things. All right, so but you need to keep it very simple by understanding how price moves and why price moves the way they are. All right, so as you all know, price moves in waves, right? They don't move in straight line. Okay, so we have three kinds of market structure. We have the bullish market structure, the bearish market structure, and the sideways market structure. All right, so now the question is, why does price move the way it does? All right, price books majorly based on liquidity, from internal liquidity to external liquidity, and vice versa. That is how price moves. All right, so if price is bullish, you'll be taking out the old highs, which is called buy side liquidity, and be returning into the range, all right, which is either FVG, order block, mitigation block, portion block, and so on. All right, so but basically I stick to FVG and order block. All right, so for internal liquidity, so once price reprice internal liquidity, it will reverse to the upside to take out an external liquidity. That's why you say that bullish trend is made up of higher highs, higher lows, higher highs, higher lows. All right, if it is bearish, it will be taking out old lows, which is sell liquidity, and returning to order block or FVG as an internal liquidity. Price reverse to head to the sell liquidity. That's why you say bearish trend is making series of lower low, lower high, lower low, lower high. All right, so the main thing is understanding the concept behind why price moves the way they are. All right, so that's why you need to always watch my video to the end so that you understand why price moves the way it does. All right, why price moves doesn't move in straight line but moves in waves, why price creates higher high, higher lows, what happens. All right, so following me, you'll be able to understand why price moves the way they do. All right, and you're going to capitalize and make the most from the market just following the institutional order flow concept. All right, keeping it very simple, no complication. All right, so I'll be taking you guys to the chart. We'll be seeing what the XY have for us for the week. All right, so personally I trade just Euro USD, that is a one pair Euro USD, and I use the XY to determine the direction bias and trade opposite. Right, if I determine the direction bias on Euro USD, sorry, on the XY, then I go to Euro USD and be anticipating the opposite direction of the XY. Okay, so at times I will analyze the XY, also analyze Euro USD. All right, but most of the time we'll be doing what the XY is doing, opposite of what the XY is doing on Euro USD. All right, so that is it, guys. So maybe if you don't trade Euro USD, you trade GBP USD, AUD USD, USD card, and the rest. All right, just understand correlation and how you can make the most. Okay, when the XY is bullish, foreign currencies will be bearish. Foreign currencies, I mean, is Euro USD, GBP USD. That is the currency that has its currency before USD. While USD card, that's the currency that has USD first before its currency, will be moving in line with the XY. Okay, so that's how correlation works. But Euro USD is the most correlated pair with the XY. Okay, they move almost 90% of correlation. Right, if the XY is bullish most of the time, Euro USD must do opposite direction. All right, so that's why I stick to one pair. Okay, I just determine direction bias from Euro from the XY, then I'll be doing the opposite on Euro USD. All right, so I'll be taking you guys to the chart. Let's see what we have for the week. What is the anticipation? What will we be looking out for in the marketplace? All right, so let's go to the chart. All right, guys, so welcome back to the chart. All right, so this is the XY. Okay, so we'll be starting with the XY before we go to Euro USD. All right, and you know what to be looking out for. Okay, so we're keeping it very simple. Whenever you get to the chart, you like to ask yourself these three questions. Number one is where price is coming from. Number two is where price is heading to. Number three is where is the next draw on liquidity. So this is the three major questions you need to ask yourself whenever you get to price. Okay, so how do you answer where price is coming from? For you to answer where price is coming from, you look for the most recent swing point price have taken. Okay, a swing point
price have taken, that is all the highs of all low price have taken. Okay, so now you ask yourself, where is the most recent high that have been taken? So keeping it very simple, guys. So looking at the daily time frame of the XY, so where is the most recent high taken? You can see the most recent swing point taken is this. Okay, sorry, this is the most recent points taken right here. So it's a swing low that have been taken. So it's the sell side liquidity. You call it what? Sell side liquidity, L sell. Sorry. So sell side liquidity, that's the most recent so this is the most recent low that I've been swing point I've been taken. Okay, you can see this low taken at this point. So you have answered the question where price is coming from. Okay, so now you can see now the second question is where is price currently? You can see at this point where price is currently. So price take out the sell side liquidity right here. Okay, it takes out the sell side liquidity right here, and yesterday, which is Monday, closed bullish. All right, it closed bullish, and price have taken the previous day high. Okay, so this is confirming that today may probably close as a swing point. This confirmed reversal, so you'll be expecting price to be filling this FVG. Okay, so to fill this FVG right here. Here's the anticipation. We expect price to fill this FVG right here. So now what I'll be looking out for personally is for price to fill this FVG and possibly reverse to the downside. Why did I think that price is going to reverse to the downside? So this is what we take us now to the higher time frame, which is the weekly time frame. Okay, so now you see the bigger picture. So now weekly time frame, now what's happened? Previous week low have been taken. You can see the previous week low is taken. All right, and the previous week expanded to the downside. It closed bearish. So whenever this kind of scenario happens, now you need to squeeze your chart and look at the bigger picture. So what's the bigger picture right here? You can see that prices came from this low, expanded to this, and take out this buy side liquidity. So after this buy side liquidity is taken, a swing point forms, confirming reversal. So whenever you see this kind of reversal confirmed, then you determine the range. Okay, you determine the range. So once you determine the range, you're expecting price to at least retrace into at least 50% of the levels. Okay, so it will retrace at least 50% of the level. So while you're expecting the retracement, then you look out for liquidity levels in this range. Okay, so what the major two liquidity levels I look out for is an FVG, then order block. Okay, these are the two major liquidity levels I look out for whenever a swing high is taken. You can see in weekly time frame, which swing high is taken, reversal confirmed, price expanded to the downside last week. So we'll be expecting a further expansion because previous week low is taken already. Okay, so this pullback to the upside is just a little pullback, then a continuation to the downside is what I'm expecting. Okay, but don't take my word for it. So now, where is the FVG right there? So if you look closely, there's a little FVG right there. So the first drawn liquidity is this FVG. Okay, in the weekly time frame, you can see this FVG marked here. So this is my first drawn liquidity. My second drawn liquidity is this mitigation block on the monthly time frame. This is a mitigation block. Sorry, block is a breakout block. Sorry, so that's the second one. Then this other block right here. So another one is this. You can see this other block right here. Okay, so at this level, so that's the draw on liquidity, but we take it one after the other. Okay, so the first draw liquidity for price to expand into this FVG because previous week low is taken. As simple as that. Okay, so you can see why I expecting price to actually continue to the downside. Okay, so keeping it very simple, but in the daily time frame, you'll be expecting this low to be taken, so price to fill this gap, then reverse to the downside to take out this low, then definitely it expand into these weekly levels. So this is a weekly FVG. Okay, so that's the anticipation, guys. Pull back to the upside, maybe from the high of the week, then return to the downside to poke into this FVG. As simple as that. Okay, so keeping it very simple, that is my anticipation for the week. All right, so we'll be looking out for price to sell. So this is just a temporal pullback, then continuation to the downside. So let me take you guys to weekly time frame. Sorry, the Euro USD. So right now, looking at Euro USD, the same narrative. Okay, where is price coming from? We look out for a most recent swing point taken. This is the most recent swing point taken at this point. Okay, so now what's happened? Yesterday closed as a contraction candle, So now we have a little expansion to the downside, previous week low taken. But before that, previous week high is taken already. Before that, previous week high is taken. The same narrative, guys. The same narrative. Before that, previous week high have been taken already. Okay, and we just have a little pullback then before a further continuation to the upside. Okay, if reversal is confirmed. So now, what are you looking out for? Okay, price is coming from this swing point. Where is it going to fill this FVG? Okay, so maybe it will fill this FVG. Maybe it may reach this breakout, this support level. That this was a resistance that turned to support. Okay, so that is using normal class normal concept. All right, so now, so once price start to fill this completely, then we'll be looking out. It may not fill it completely, but whichever way, once it fill it now and reversal is confirmed, then we'll be looking out to buy into this daily FVG. You can see this FVG right here. Okay, so we look out to buy into that daily FVG. So that's what I'm looking out for, guys. But what I used to do is like yesterday I actually sold. I caught this sell from here because sell side liquidity have been taken, price side liquidity have been taken. Okay, then let me show you the setup. So this is the setup right here. So you can see buy side liquidity was taken. Sorry, the old high was taken. Then I saw that price may likely reverse to the downside. So I look out for my entry model, shift the market structure, and return to FVG. Then I sold. Okay, to take out this Asian low, and they have delivered. Though I'm still holding some of the trade. Maybe I will show it on the screen. So I'm still holding some of this trade. Maybe to I closed partial at this point, then closed another partial at this point. Remaining few because I'm expecting a further expansion to the downside. Okay, so that's why I'm still holding some. Okay, at least to feel maybe reach at the middle of this FVG, then before I will close. All right, for the swing, and expect price to reverse to the upside. Okay, so what I used to do is I'm going to be selling until reversal confirmed, which is either a swing point in daily time frame or a classical break in market structure on 1 hour. Okay, to the upside. Then you know price want to expand to the upside. Then the next target is for price to reach for this FVG. Okay, then after that FVG, then we're expecting price to take out here this high if this FVG couldn't hold price. So that's what I'm looking at for the week. Okay, so price take out this swing point. It want to retrace into this internal liquidity. Okay, you can see external liquidity, then further expand to external liquidity. Where will be invalidation? Invalidation is maybe if this low here is taken, then you know price wants to continue to the downside. But see there, I think we'll be expecting a further expansion to a push up to the downside, then a decline to the downside. All right, but this because all these moves to the upside is just temporal, but we actually follow the price. All right, so anything that happens, if it gives us reason to actually change direction, we can change direction. All right, so that's the anticipation for the week, guys. So I'm selling into this FVG, then reversal confirmed, I will buy into this FVG here or into this buy side liquidity. So whichever one. All right, I'm selling to buy. Simple. So as simple as that, guys.
Alright, so that's it, guys. So that's what I'm looking for on Euro USD. Okay, I'm expecting price to actually return into that FVG, then expand to the upside. Alright, but I always maintain my direction bias until reversal is confirmed. Also, okay, so if reversal is not confirmed, then I'll maintain the bias. All right, so that's how it is, because at times you may try to predict price, all right, you don't not knowing that price want to change direction completely. Okay, so that's why I actually maintain a direction bias. As I'm selling, I'm still selling, all right, until the FVG is filled, then reversal will be confirmed on daily time frame before I will change my bias for the bullish bias. Okay, but we have higher chances of closing bullish this week because Tuesday or Wednesday may give us the low of the week, then expand to the upside on Euro USD. Then Tuesday may give us high, or Wednesday give us high of the week, then expand to the downside on DXY. So that's the anticipation, guys. All right, so I'm actually more bullish on the USD because previous week high is taken already. Just the little sell we are selling, just a temporary sell for us to buy into the directional bias. All right, so that's the anticipation, guys. That's what I'm looking out for today on this week on Euro USD. All right, so and I have actually made good profit right here. You can see it here. I've made profit yesterday. All right, from catching trade from this top, all right, to the downside. All right, so that's it, guys. So this morning I'll be looking out for a sell. I'm actually looking out for a sell. Okay, maybe if this high is taken, this swing high is taken already. So maybe if this swing high is taken, okay, then on my entry from, then I'll be selling further to the downside. But see, then let's keep watching, guys. If there's no entry, we are good. All right, maybe if we didn't see entry at the London key zone, we wait for a New York key zone for us to continue the sell to the downside. Then once the FVG is filled completely, then we actually reverse to the upside. So that's the anticipation for the week, guys. So keeping it very, very simple, guys. Keeping it very, very simple. That's it. All right, so this week it's going to be a profitable week already. All right, so because I've closed most of the trade on profit, like the first entry, the reversal I caught yesterday. Okay, so I've closed most about 80% in profit. All right, so now today maybe if market give us an entry, we hop in and execute 100%. All right, one of the challenges I faced while I was still struggling to profitable is not being able to execute 100%. Doesn't mean the system is not profitable, but the problem was myself. All right, so maybe if you are in that category, you're still struggling to go in consistency, not that your technical is not good, but the problem is for you. Just know that the outcome of every trade is probabilistic. Everything I say here is just under probability. It doesn't mean that it must deliver that way. Okay, anything can happen, right? And normally I'm very flexible in the marketplace. If there is reason for me to change bias, I'm very flexible. I don't hold my bias onto the market because anything can happen. Okay, so that's why I'm very flexible. If market gives me reason to change direction bias, I will change. Okay, the main thing is to make money, not to be right or wrong. All right, according to Mark Douglas, you don't need to be right or wrong for you to make money in the marketplace. All right, so the main thing is know your game, know what you're doing, know what you're looking out for, know what you're expecting. All right, and be flexible in the marketplace. All right, so guys, it's a profitable week. If this is your first time of joining me, do well to subscribe. If I'm not subscribed, it doesn't bite, it doesn't waste time. Click on the subscribe button right now, then turn the notification bell, and also give me a thumb up, right, so that YouTube algorithm can actually take it to others that actually need this. All right, so till next time guys, I wish you all good luck and bye for now.